Welcome to the Accendo Traders Group. This is our 30-day challenge, and we are on day 26. And as you know, we like to start off with a little cartoon. And for our Jim Cramers of the world that are always bullish, I'm sure this is how they're feeling in the market today. Today we're going to talk about market internals. We're going to look at an introduction to market breadth. So what exactly is this market breadth? In simple terms, we're going to go down to the bottom here, and it's a simple calculation of how many stocks are rising in value compared to how many stocks are declining in value. How do we use this market breadth? Well, first of all, it gives us a feel of how the market is doing overall. It gives us some confirmation about the trending going up or the trending going down. And again, we basically call this the market sentiment. You know, the Dow Jones is only 30 stocks. However, when we're talking about the market breadth, we want to obviously have more than 30 stocks. So we use breadth to give us a sentiment for what the market is doing. How do we calculate it? Well, we use some internal indicators called volume, advance and declines, and new highs and new lows. In simple terms, if there are more stocks closing higher today than yesterday, then our breadth is going to be positive. If there's more stocks closing lower than the previous day, then the breadth is going to be negative. That's what it is in simple terms. However, we're going to expand upon that now. So again, we talked about this thing called volume. Now, we all understand what volumes are. It's at the bottom of all of our charts. However, when we're talking about volume with market sentiment, we're talking more about what is called up volume and down volume. Makes sense. Up volume is buying, pushing the stock up, pushing the stock higher. Down volume is selling, pushing the stock lower. So what we do is we make a comparison of the up volume, how much buying is coming into a particular stock, compared to the down volume, how much selling. And again, we divide these to come up with a ratio. Is it 10 to 1 positive? That means there's more buying going on than selling. Or is it 14 to 1 negative, more selling going on? So again, we're comparing the up volume, the buying of the market, compared to the down volume, which is the selling of the market. An advanced decline is pretty much as simple as it says. This data gives traders a look into how many different companies are taking part of the rally or decline. So if the market is moving up, we want to see the advancers to be bigger than the decliners. And again, we're looking at a ratio. We're looking at a number. Similarly, if the market is going down, we want the decliners to be bigger than the advancers. Advancing stocks are going higher. They're advancing. Declining stocks are going down. New highs, new low is basically an extension of this. Not only do we want to see stocks that are advancing, we want to see if they're making a new high, a new 52-week high, or are they making a new low, a new 52-week low. New highs or new lows are for companies that have a positive negative feeling towards its performance. If stocks are making new highs or lows, movements in the broad market should mirror that same sentiment. So again, this is another calculation that we look at to gauge the market sentiment. If I'm looking to go long on some positions, I want to see the new highs outpacing the new lows. So what are our trading rules for this? We up volume and down volume and advancers and decliners, new highs and lows. In simple, we use this as a sentiment. We use this as a gauge. However, we do not use market sentiment, market breadth, to rationalize to get into a trade. It's just another thing that I use for confirmation. I'm going to show you in a second. We want the internals to confirm our price move. When we look at our charts each night and set our alerts for the next day, as the market is moving and we're getting ready to make our buy or sell signals, we want to use these internal indicators to confirm, yes, the market is going up and that this is a good time to get into a long position or vice versa. It's also good to see when the market is diverging. Again, if you see stocks going up, but you see the market internals showing that there's a lot of down volume, or the decliners are outpacing the advancers, new lows are outpacing the new highs, then that's showing us a reversal that underneath in the engine, the internals are weak, and this might be a time for you to hold off before you go long into position or vice versa. A reversal occurring when the internal indicator is in a overbought or oversold condition may mean fast-moving price changes are ahead. So We use this for confirmation, and we use this to identify possible reversals, or more importantly, we want to make sure the internals are giving us the same signal as our buying signals the previous night. So let's go ahead and take a look at some examples. Okay, what we have here is a charting layout that I have in my Thinkorswim platform, and what we really want to pay attention to is what's going over here. We do have tick and trend Q on the NASDAQ and VIX, but what I really pay most attention to are the four over here. Up first, we have a comparison of the up volume and down volume on the NYSE. And so the purple is down, the green down here is the up volume. Down here we have the same thing, the up volume compared to the down volume on the NASDAQ. So purple's down volume, green is up. Over here we have a comparison of advanced decliners. This is on the NYSE. The blue is down and the green is up. And here we have the advanced and decliners on the NASDAQ. So what I like to do as a part of my trading system is when I'm considering about making a trade intraday, I like to go ahead and pull up this chart and see if the internals, the engine of the market, is working in my favor. As you can see, according to this setup right now, there is a strong push internally to the downside. There's more selling, there's more volume being pushed down, selling volume, than there is up volume. So why am I going to buy a call? Why am I going to go counter be the salmon swimming up against stream? So this is as a part of my checklist, before I hit my execute button, I do like to pull up this screen and just see what's going on internally to see if it's confirming with the direction that I'm looking at. So again, I'm looking over here and seeing, not only do I see that there's down volume, but you can see how it's spreading, and you can see that down volume is actually pushing higher, while the up volume is staying the same here. Again, on the NYSE, down volume is pushing up, while up volume is doing nothing. And what's interesting is when you'll see the market kind of pull back in either direction, you'll see these start to converge towards each other. But when they're diverging, you really want to stay with trades in that realm, in that direction, versus trying to do counter trend trades. Let me show you another way that I look at this visually. Okay, what we're seeing now is just another visual look at what's going on with the market internals. You can see we have up volume, down volume, and what their totals are. And then we take these two totals to make a ratio. So you can see right now the down volume is 15 to 1 negative. 6%, 93%, 15 to 1 negative. So obviously the market's heading down. Same thing with advanced decliners. And decliners right now are about 10 to 1, little less than 10 to 1 negative. Again, why would I be in a trade, initiating a trade for a call for a long position when the market is so negative? And then we have our normal Dow Jones, S&P 500, the Russell, the NASDAQ, the VIX, and we can see what the changes are going on there. And over here we have the NASDAQ, and we have our up volume and down volume, advanced decliners. Again, on the NASDAQ, we got a 11 to 1 now negative, almost 5.5 to 1 on the advanced decliners. Remember, up volume over here is the NYSE. So it's another visual representation when with the spreading and the converging and diverging that we saw on the last chart. Here we get actual numbers, and specifically what I go here on is what are the ratios. And so today started off in the low 4 to 5 to 1. 5 to 1 negative, and now look, it's all the way up to 15 to 1 negative. So I'm really looking at the ratio. These other numbers are good, but specifically the ratios. I wanted to take a quick moment and make sure, give credit where credit is due. In reference to the market internal setup that you saw in Thinkorswim, I did get that from the Shadow Trader. Those of you who watch my weekly trade plans know that I really do appreciate his knowledge on market internals and fundamentals, and he's awesome. So shadowtrader.net, go to the archive section, go to video weeklies, and he has all his weekly videos, and then inside his weekly videos he has a setup on how to set up Thinkorswim for market internals, and you could probably transfer that into whatever brokerage platform you're using. So I highly recommend that, and obviously I recommend his weekly videos. So and also the the spreadsheet that you saw was also a version of something that he has shared. So definitely check out the Shadow Trader. And I'm going to finish with saying that I have a free offer for those of you who are participating in our Accendo Trader 30-day challenge. I'm going to give you for free the volume matrix that, again, was developed by the Shadow Trader. So if you go to this website that I'm going to show you right now, you can get the free Accendo Traders volume matrix. Let me bring that website up right now.